Hello everyone, I hope you and your family members are well. So today I'm going to make a short video on ledgers and journals for IGCSE accounting students, because I've seen many students confused between these two things, and I hope this video will remove all your confusion. Remember, understanding the differences between journals and ledgers is very important, because these are the fundamentals of your entire accounting syllabus. The reason why many students have confusion regarding journals and ledgers is that their understanding of the basic accounting principle or process is not very clear. So that's what I'm going to start with. If we look at the accounting process, it always starts with invoice and receipt. Okay. By the way, this is not the entire accounting process, because we are not talking about the trial balance and financial statements. We're going to focus on just the first three steps. So getting an invoice or receipt is the very first step of the accounting process. And if you have any confusion regarding invoice and receipt, let's just look at another slide. So invoice is a request for payment, whereas receipt is a proof of payment. And most of us are familiar with receipts because whenever we purchase anything from Walmart or any store, we get a small piece of paper, and that is the receipt. And this is what an invoice looks like. So invoice is a document issued by a seller, okay, asking for a payment from the buyer. So this is what an invoice looks like. All the items are listed over here. There is price, tax, and the total amount owed. Okay, so the buyer actually checks the invoice, and if everything is fine, that's when they send a check. All right, so that's why invoice is a request for payment, whereas a receipt that looks somewhat like this is actually a proof of payment. Okay, you get an invoice before the payment and you get a receipt after the payment. All right, okay, now let's go back. So invoice or receipt are the first steps of the accounting process. So every day the business or any specific business buys a lot of things, sells a lot of things, and as a proof of those transactions, they collect and store all those invoices and receipts. And then at the end of the day, they give all those invoices and receipts to the bookkeeper. Okay, there's a difference between an accountant and a bookkeeper. Okay, I'll get to that later on. So once the bookkeeper gets all these invoices and receipts, he records those in the books of prime entry, which is also known as journals or day books. So remember, these three things are the same. Okay, some people call it books of prime entry, others call it journals, whereas others call it day books. Okay, all of them are same thing. So this happens at the end of every day, before the office closes down or the business closes down. At the end of every day, they record all the invoice and receipts they received into the books of prime entry. All right, and then at the end of that week, all those entries from the books of prime entry are recorded to the ledgers. All right, so here we can see one of the main difference between journals and ledgers. Journals are done at the end of every day. Okay, that's on a regular daily basis, whereas the ledgers are usually done at the end of each week or each month, at the end of each month. All right, okay, now let's go into much more details regarding journals and ledgers. So we have already discussed this. Okay, so journals are known as day books or books of prime entry. I have already discussed that. Now the important thing is there are 7 types of journals. All right, not all transactions are the same. You buy something, you sell something, sometimes you return things that you have bought, and sometimes your customers return some goods that they have bought, they return it back to you, right? So there's different types of transaction that takes place. So let's look at the 7 types of journals. So I'll just go through them very briefly. At the beginning, we have the purchase journal, right? So whenever you buy something from your supplier, you record that in the purchase journal. And sometimes you realize that some of the goods are damaged, right? Or not up to your expectation, or faulty goods. In that case, you return them back to the supplier, and that's where you record those transactions. Okay, you record them in the purchases returns journal. Okay, and then we have the sales journal. So whenever we sell something, we record in the sales, and sometimes our customers, when they're not happy with the goods, they return it back to us, and then we enter it or we record it in the sales returns journal. All right. Okay, then we have cash book. So remember, all these four types of transactions regarding purchase and sales, all these are done on credit basis, not cash basis. Okay, on credit basis means you are buying now but paying later. All right, or you are selling now but getting the money later. Okay, it's not cash basis, non-cash basis. Okay, so whenever you buy or sell on non-cash basis or on credit, you enter them in either a purchase journal or a sales journal. All right, but if the transaction involves cash, okay, so it's not like not buy now pay later. Okay, buy now pay now, or sell now get the money now. So if it's on cash basis, you enter those transactions into your cash book. And then we have another journal called petty cash book. Okay, so sometimes we pay for something very small, right? For example, we bought a pen for the office, or let's say a small book. Okay, or some guests came, or our customers came to our office, and we had to pay for their coffee. So all these small expenses or sundry expenses are recorded into the petty cash book. And then finally we have the general journal. So any transaction that does not fit either of these 6 type of day book or journals, you just put them into the general journal. Okay, so general journal is basically for all other types of transactions that does not fit with either of these five books of prime entry. Okay, all right, so this is how this is what a sales journal looks like. Okay, and all types of journal will probably look the same. You'll have columns for date, okay, and then column for description. So you give the date and what kind of description it is, like for example, from whom you bought, in this case it's a sales journal, so to whom you sold the items or sold your goods or service. Okay, and then the invoice number will be recorded. So if you notice, in every invoice or receipt there is a special code or number. Okay, so that's like just to identify it among all other documents. So that invoice number will be noted here, and then finally the amount. Okay, the amount of the transaction is recorded in this column. Sometimes you might find an extra column here, okay, that might say discount received or discount allowed. Okay, but let's just keep things simple here. So doesn't matter if it's a sales journal or a purchase journal. Okay, returns, purchase returns journal, sales return journals, all journals or day books or books of prime entry looks basically the same. Okay, other than the cash book. We'll discuss cash book sometime later. Now let's discuss about the ledgers. So there were 7 types of books of prime entry or 7 types of journals, but when you come to ledgers, there are only 3 types of ledgers. Alright, so first of all, there is sales ledger that includes the personal accounts of credit customers. So that means all the customers to whom you sold on credit, okay, their account will be recorded or included in the sales ledger. Next we have the purchase ledger, and you can guess what it includes. It includes all the personal accounts of credit suppliers. Okay, so all the suppliers who gave you their goods or who sold their goods to you and you did not pay them yet, you're going to pay them later on. And then finally we have the general ledger, and inside general ledger we have the real accounts and the nominal accounts. Okay, so we're going to look into these two things later on in a few seconds. So personal accounts are all individual or companies accounts with whom the business deals with. For example, if you are buying something from, let's say, H. Muller's account, let's say H. Muller is a supplier, and you have multiple suppliers, so and all of them deals on a credit basis with you. Okay, so all their account will be recorded in either the sales ledger or the purchase ledger. Okay, depending on if he is the customer or the supplier. Okay, now let's look at real account. So real account is a part of general ledger. So what is real account? Real accounts are assets and liabilities related accounts. So for example, in your business, you might have some machineries, right, or some furnitures for your office. All right, or maybe you took a big loan from the bank. So all those are your real accounts. And then finally, we have something called nominal accounts. And what are those? Those are related to your income and expense. So for example, you're paying your electricity bill, right, or water bill for the business. Okay, so that's one of your nominal accounts. So general ledger never ever includes personal account. Okay, if you have personal accounts in your business, they will be either categorized under sales ledger or your purchase ledger. Okay, so general ledger only includes either real accounts or nominal accounts or a combination of both. Alright, so this is what a sales ledger looks like. So you have T accounts of all the customers that who bought things from you on a credit basis. That means they have bought goods from you but they did not pay yet. Since you are dealing with them on credit basis, you put all of their accounts under the sales ledger. Okay, and then this is what a general ledger looks like. So just I've mentioned before that it includes nominal accounts or real accounts. So you can see it includes the cash account, the salary account, salaries and expense, okay, service revenues and income. Okay, so and then you have trade receivables, which is an asset. So under the general ledger, you have all the assets, the liabilities, the income, the expense, all those accounts. Alright, so I hope the difference between journals and ledgers are clear by now. So let's just sum up everything that we have covered. So as soon as you get an invoice, okay, what you do is you enter them into the journal, which is also known as daybook. So this is what a daybook looks like. It's a very simple format. You only have 3 or 4 columns with the dates, the details, invoice number. Folio is also very similar to invoice number, and then finally the amount. And it is done at on a daily basis. Okay, and then at the end of every week or every month, you transfer or you record all those things into the ledger. Okay, you make them more organized. And finally, what you do is you also make an entry into the general ledger. Okay, which is also a type of ledger. Okay, so this is just the first 3 steps of the accounting process. Once you're done with ledger, what we do is we transfer it to something called the trial balance, okay, to make sure that our debit and credit sides are same. And then finally we transfer them to the income statement or balance sheet, but that's not part of our discussion for today. So let's solve one question. This has been taken from an actual exam paper, so I'll just give you 10 seconds and see if you can solve this. Alright, so if you have selected B, then you're correct. B is the only answer that makes. Alright, so if you remember, this was one of our previous slides that we discussed, and you can see there are only 7 types of journals available, and anything that does not fit in either one of these first 6 journals, we just post it to the general journal. So if we go back to our question here, the first one, cash payment to an employee for expenses. So this will obviously go to the cash book. Alright. Option C, credit purchase of goods for resale. So that is obviously going to the purchase table. And then return of goods by customers. So that's the sales returns table. So option B will go to the general journal. So correction of error is actually a transaction. That is not really buying or selling, it's just you're fixing a previous error. Maybe you have overstated a previous amount. Okay, in order to fix that, you're making an adjustment entry. So that will go to the general journal. Alright, so thank you very much. I hope you have benefited from this lecture. Please share it with others who might find it useful. Thank you.